You're listening to a bonus episode of The Voluntary Life, where you can hear ideas for finding freedom in an unfree world. Visit thevoluntarylife.com to connect with the show and hear all past episodes. Here's your host, Jake.
Hi patrons, it's Jake here. This is a bonus episode about tax. It's a recording from a recent patron live stream, and I'm talking to one of my listeners about different strategies for reducing your tax burden and my own experience of tax as an entrepreneur. So I hope you enjoy the episode, and without further delay, here is the recording.
Jake, I had another question for you.
Yes, go for it.
You did an episode, and I have to actually you did 2 episodes with this gentleman. I can't remember. I have to look up his name on tax strategy. It was a guy with his own podcast.
Yes.
And this is, I think, 2015. And I went and I checked out some of his materials in his podcast, but he didn't really seem to have a lot that I could find anyway that was focused on those topics. I was curious if you had other resources that you found helpful that sort of spoke to that.
Yeah, thanks for that question. And I remember that you posted about this in the Facebook group, and I've been mulling it over and meaning to get back to you. Now, let me ask you a question, because one of the things that he talked about, there are different tax strategies that we talked about on that episode. And we talked about specifically some things that are relevant for Americans, like, for example, this Roth IRA ladder strategy thing. And I know you mentioned in your comment that you were particularly interested in stuff that's relevant for Americans, but is that what you're interested in, that particular strategy, or was it more just general stuff about tax? General,
yeah. I mean, the idea of utilizing, let's say, like I think in some of his examples, a business entity to try and change the way you're taxed. And I know there's a lot. I mean, I'm sure there are very expensive experts that one can consult on these types of topics, but it seems like he also made another point. I can't remember if it was in the episodes that you had with him or if it was one of his own episodes, that a lot of accountants, I don't know how it is internationally, but here in the US, when you engage an accountant to help you with your taxes annually, they're just about filing the return. They're not really there to, they don't they don't charge you by the hour and make money by trying to figure out what the optimal tax strategy is for you. Only in the most rudimentary way, in the most conventional way for people who are an employee somewhere and they're paying some amount of income tax. So I think, and he was saying then that, it's very hard to find an accountant who's willing to kind of talk to you a little more in depth, how to configure things, financially to optimize or minimize tax. So yeah, I was thinking something more general that kind of speaks to these types of strategies. And I don't know enough about the international tax regimes to know if there's a lot of applicability. It's the same types of general strategies. Maybe they have different names and different tax regimes, but it's the same kind of idea. Yeah. I don't know enough about it to say if that's the case or not.
It's a really good question. I mean, tax is one of those things that I've read loads of bits of relatively useful stuff here and there, but I don't have a list of books that I felt like, oh, wow, that's just exactly opened my eyes to everything I need to know on this subject, And I think part of the reason is tax is so arbitrary and there's a lot of weird country-specific stuff. So it's kind of about, a lot of the useful things are about knowing the weird specific stuff that you can do. But let me give you a brief overview of some of the things that I have found helpful to understand. So as we talked about in that episode, the one that I did with Joshua about different tax strategies, there's 2 different sort of approaches. There's the entrepreneur approach, and there's the what can you do just to minimize your taxes as an employee, and often just as an individual. As an employee, I don't know that much about really clever tax minimization strategies, but what I do know, and what I will suggest, is that the extreme savers, the people who are really into that kind of approach to achieving financial freedom, there's a lot of discussion on their forums about tax and about ways to reduce your tax as an individual and as an employee. Now, I know that you're an entrepreneur, but just in terms of specific things that might be helpful. So, for example, the blog Go Curry Cracker has an interesting article about, he's done a few articles about their approach to saving money and the way that they use this Roth IRA ladder thing to essentially take money out of their retirement account without incurring a tax liability on it. And so there are some things, if you're interested in that side of things, particularly with reference to things like clever things to do with retirement accounts, I would recommend looking at the Extreme Savers and what they've written. And in terms of specific things relevant for Americans, I know that Go Curry Cracker has also written about the things that you can do if you're an American who's living an expat lifestyle. Because, of course, for you guys, I mean, the difference for me is that when we are expats, when we're totally unsubscribed from the UK, then we don't pay any tax to the UK. That's it, we're gone. Whereas Americans never actually leave. You can check out, but you can never leave. You got to report to the IRS. And there are specific deductions and clever things that you can do to kind of really make the most of your reductions. So if you're interested in that, if you're planning in future to do a more international lifestyle, then you might want to check out Go Curry Cracker's articles about tax, because that might be a useful thing. So that's the employee and specifically more American-oriented approach to dealing with tax law and your obligations to report when you're abroad. But to tell you about my experience, so I obviously went the entrepreneurship route, and we didn't really think that much about tax strategy in the beginning because, frankly, we didn't make any money for the first. Well, I mean, it took us 5 years to really hit historic break even, where we paid off our initial startup loans and everything else. We were making a profit by that point, but we still had debts and things. So in the beginning, we were just spending money, and we didn't really worry too much about tax. And then all of a sudden, after 5 years, we started making a lot of money, and suddenly we had huge tax liabilities in the company. And we had to really think about, what the hell are we going to do with our tax burden? The interesting thing for me was that it took, between when we really started to make money and when we eventually sold the business, that was really only 2.5, 3 years. So we had a couple of years when we had, within the company, we had quite a bad tax liability each year, but we were making a big profit. And then eventually what we did was sell the company. And in the UK, specifically for selling a company, there's a lower tax rate than you would get from, for example, capital gain or anything else. There's like a specific entrepreneur incentive, which meant that the taxes that we paid on the sale of the company were originally, they were going to be 10%, and they were actually then slightly higher because they changed the laws and various other things changed. So we paid a bit more than that. But still, we were looking at the biggest deal of our careers, and essentially we were not going to have that much tax on it, because it just so happens that when you sold a company in the UK, you didn't pay that much tax, as has been set up as a kind of incentive, I believe, during Margaret Thatcher's period, to try and incentivize entrepreneurs. So I kind of lucked out, because I, first of all, lost money for quite a few years. Then I started making a lot of money and started paying a lot of tax. And then I sold my business, and I sold it in such a way that I didn't accrue that much of a tax liability. And that was my route, because then obviously once having sold the business, in the UK, we don't have a wealth tax. So as I don't think you do in the States either, but you do in some countries, like we're just finding out that Spain has got one. So in the UK, once I'd sold my business, my tax liability I really only owe tax mostly on capital gain when I sell some of my assets or when I earn interest on things. And I have organized things to put things in a retirement account and try and minimize my tax liability as much as possible. But I guess what I'm trying to explain to you is that I went the entrepreneurship route, and I found that there was a very good way of realizing a lot of value out of my company without paying a lot of tax. And it happened to be through selling it. And that was the way that worked for me. Now, I have no idea about the laws in the States and whether or not there's similar kind of routes that you can go. I will tell you that before we sold the company, we looked into different strategies for reducing tax, and we looked into all sorts of complicated things involving offshore stuff. But it would have been incredibly complicated, and I never felt very comfortable with getting involved in those kind of schemes, because you're always slightly at the mercy of whoever it is, the lawyers and accountants who are helping you set this kind of thing up, and the trust people who run these kind of schemes. And I never felt 100% confident as to what was going on. Obviously, whatever you do in that kind of offshore world, what you're involved in is essentially putting things outside your control and ownership and benefiting from them in some way through some kind of trust or something, but without really owning things. And there's definitely a downside to that, which is that it's all a bit murky. And it's nice to own things. So we didn't go that route in the end. We just ended up selling the company. And I guess along the way, I did manage to find some advisors who were able to talk to me a lot about tax. And they were good advisors, particularly for the sale of the company. So there are people out there that you can find. But that's sort of the place that I got advice, was just in finding. It was actually the person who really helped me was a consultant who specifically advised people on selling businesses. And he helped structure the deal. And he was an accountant by training, but he kind of specialized in this. And as I said, I don't know whether or not you would potentially have the same kind of benefit in the States, but that's the sort of tax strategy that worked for me. And in a way, it was a super simple one. It was just to sell the business. And it just so happened that at the time that I sold it, that was actually a very tax efficient way of realizing a lot of value. But it wasn't anything too exotic, really. So I'm not sure that that's necessarily going to apply in the States, but that was my experience. Does that kind of make sense?
Yeah, no, and I share your apprehension about sort of experts who, talk up a lot of really complicated schemes. I find that with a lot of those in any area, that their advice doesn't necessarily always work out the way that you think it's going to work out, because there's so many variables and so many complicated things that you entangle yourself in that I would agree with you that keeping things sort of simple and conventional, there's definitely some merit in that. What is the forum you mentioned? The extreme. I know Go Curry Cracker. I've certainly checked out their stuff, but you said the Extreme Savers forum.
Yeah. So the other ones that you might like to check out are Early Retirement Extreme. I think his website is just earlyretirementextreme.com, and Mr. Money Mustache. I would just.
So you were just talking about the kind of category of extreme saver.
Yes, yeah, I was. Yeah, exactly.
Yeah,
the other one who's done a couple of articles about tax is Root of Good. If you have a look at his website, I know he's done a couple on his tax minimization strategies.
Okay.
So yeah, check those out. I thought some of the basic advice that Harry Brown gives on tax, I think, was really quite helpful and sensible. And he was in his books, he was always quite skeptical about complicated offshore stuff as well. It's because of Harry Brown that I ended up really using a retirement account a lot. So when I sold my business, I worked for this other company, that I sold it to for 3 years, and I basically put 100% of my salary for 3 years into a retirement account to minimize the income tax. So I didn't pay any income tax on that. On all that money. And I had been very skeptical of retirement accounts before reading Harry Brown's book, but he just made the point that the tax advantages are so huge that it's sort of a no-brainer to use them where you can, and to make the most of the opportunity to do so. And I think in the States, especially because there are funny, like weird little tricks that you can do to take money out of retirement accounts, I think it's definitely worth looking into. So that's another thing that I did, which is, again, it's not very exotic, but it was Harry Brown's advice that led me to, because I kind of, as I said, I was a bit dismissive of the whole retirement accounts thing, and I hadn't actually built up much of a retirement pot before selling my business. But then I just put 3 years of this director of an international engineering company salary into the retirement account, and that has also been a useful tax minimization strategy. Let me tell you one more thing, actually, that while it occurs to me, which I wasn't super clever about. If you do have a diverse portfolio of different asset classes, and if you do have some tax sheltered accounts like a retirement account or any other tax-free type account, I don't know what you call them in the States, but we have savings accounts which you don't pay tax on. You don't pay capital gains and stuff. One thing I didn't do that I think would have been clever was to make sure that I had a portion of each of the different types of things that I invest in those tax-free accounts, so that if you rebalance your portfolio, then every time I rebalance my portfolio, I basically have to pay some capital gains tax. And it would have been smarter for me to have had a little bit of each asset class in the retirement accounts, so that when I rebalanced, I could always essentially reduce the amount of tax then. This is getting a little bit arcane, but I just wanted to make that point, if that made sense.
Yeah, it makes a lot of sense. Yeah, because you could, in theory, you might be able to often just rebalance it within your retirement account, and then you don't even have to worry about your tax deferred account.
Exactly. Like I did what Harry Brown suggested, which is put those assets in tax sheltered accounts that are gonna give you interest, because that's what you're going to end up paying a lot of tax on. And put things outside the accounts which you're only going to really pay tax when you do capital gains. Now, I think that advice made sense in the era when there was interest, but since we don't actually, there is no interest at the moment, so actually most of my gain has been through capital gain, and that's all. A lot of that has been not sheltered, and so when I sell gold, or for example, then that's something that I rebalanced out of gold in 2011, I think it was, when gold spiked massively, and I got a hefty tax bill off that. So that's just something else to consider.
Okay, great. Yeah, thanks for that.
Pleasure.
Thank you for being a patron of The Voluntary Life. Your support makes the Voluntary Life podcast possible and is helping to grow and improve the show.